Hello, everybody, and welcome to the monthly market memo for the month of November 2025. I'm Case Eichenberger, the Chief Investment Officer with RetirePath Advisors. And in today's short video, we wanted to walk through some of the key headlines that shaped our markets for the month of November, give a little bit of an outlook for the rest of the year, and go through some of our more frequently asked questions that we were getting from clients like yourself. So without further delay, let's go ahead and jump into it. And a little bit more volatility for the month of November. I like to start every video and just walk through the returns we saw for the month and for the year so far. We did see a little bit more volatility. We did get a first 5% drop, which I'll walk through here in a second. But at the end of the day, stocks rallied actually last week to finish positive for the month. This now marks 7 months in a row, which is quite rare that we've seen consecutive gains. So for November, you see kind of muted returns here, but mostly all positive. International stocks like basically flat for the month. S&P 500 up 0.25%. Small cap stocks actually led the way, but bonds were really kind of something I was keeping a close eye on as they provided really a ballast with this short-term volatility that we saw, and we're up total return wise over 0.5%. Year to date, it's still a similar story. International stocks are actually aiding the portfolio the most. They are leading the amount of returns that we've seen so far this year, up close to 30% on the year. Not too far behind, of course, is the S&P 500, our US large cap stocks up close to 18%. And it's just been a great year. It's been a great 7 months. Bonds, cash still beating inflation as well. So really just good returns here. After we kind of got all that volatility of April behind us, we've started to see more positive returns in the market. Now, just to kind of put more of a highlight on these last 7 months, it is really amazing what we've seen. We've seen, again, 7 months in a row, consecutive 7 months of returns for investors in the S&P 500, and about 24% returns in those 7 months since May. So May, June, July, August, September, October, now November. What I wanted to just show you here is this quick chart on the left that just shows you how many throughout history, really going back to the 50s, of consecutive months in a row of stock market returns. You can see we're here on the far right at 7. We saw 7 also in the 2020s, 2021. But before that, it's really quite rare. I counted maybe 13 or 14 times this has occurred since the late 50s. So just something that's been a historic run here for the S&P 500. And again, 24% return. So basically, 2 years of returns in just those 7 months that we've seen. Now, this does take us a little bit extended into the stock market, meaning we are a little bit expensive. I talked about that in last month's video, so I encourage you to check that out. We do believe this bull market, while it is still young, it still has room to run into 2026 as we get ready for the next year. So just really good returns for November, for the last 7 months for November, but it didn't come without volatility. We did see volatility pick up here in quarter 4 and especially in November. Now, what I'm showing you here is looking at the volatility index, otherwise known as the VIX index. Now, basically, if the line goes higher, that means it's a lot more volatile. If it goes lower, not a lot of volatility happening. Really, the average is about 20 or so that we see on the VIX throughout history when I calculated this for you. And you can see here in October and in November was preceded by really low volatility after that April tariff tantrum that we saw. But really, October and November picked up just a little bit, got a little bit above average. Didn't really get to any sort of warning sign by any means. It still stayed below one standard deviation above the average, which is still within what we expect for a month. But it just kind of shows you how low the volatility was before. And, volatility does happen in the stock market. We always want to remind you of that. We did see that first 5% pullback. Now, these do happen. I'll show you in the next slide how many times they do happen, but we do see 5% pullback several times a year. And that is still happening in a bull market. It will always happen that way. We actually saw only 2 pullbacks of 5% or more in the last 1 year. Now, of course, one happened in March, and which led to further declines there in April. But since then, we really haven't seen any volatility in the stock market until we just touched it about a 5% pullback in November. But after that, markets were back to close to all-time highs and still finished the month very positive. So normal times, I expect more volatility here in December and to start the year. But volatility is normal. It is something that we do see in the stock market to get those big gains that we traditionally can see. We do typically see a 5% pullback 3 to 4 times a year. So I just wanted to really point out how normal this is and to really not get shaken by it. If you see the headlines, they're going to make a big fuss out of every little pullback, but we just want to remind everybody that this is a normal market behavior, basically. We see, a 3% dip or so 7 times a year. That 5% pullback that I mentioned, about 3.5, maybe, somewhere let's just call it 3 to 4 times a year. A 10% correction 1 time a year, which we got this year. We got in April. And then, severe correction every other year and a bear market or so every 3 to 4 years. So really the stock market does go up over time, but it's not without any type of volatility. And a 5% pullback is definitely normal, and that's what we saw in November. So one thing I still wanted to highlight here is even though we did see that pullback, you're going to see a lot of headlines. It's really important to try to tune out that noise, the media that you may see on CNBC or Fox Business, whatever it may be. They're selling action. They want people to take action because that increases their viewership, of course. But really, what we want to show is that if you take action, there's a chance you miss some good days in the stock market. We've showed this chart before from Franklin Templeton. Basically shows throughout history or so, you have about, let's just say a 10% return staying invested in the stock market. That's on that far left-hand side. You see that blue kind of shaded box at 10%. If we miss just the 10 best days, which I highlight here, we take that 10.5% return and you reduce it by almost one half down to 6%. And this has a very big impact on your total wealth created over that time period. So again, just missing those best days in the stock market can really reduce your returns, which can really reduce the chances of getting to maybe your retirement goals or any other goals you're looking to fund with these longer term assets. So we always preach staying invested. Your individual circumstance may be different, of course. A little bit of having a higher cash balance doesn't hurt, but completely getting in or out of the market is something that we try to preach to not do and to just stay invested for the long term for the bulk of your assets. So really, this is always evergreen material. We try to talk about this once or twice a year. November was a really good time to bring it up again because we finally saw some volatility, and I think it's just a good reminder how complacent some investors have gotten. That thinking volatility was never going to happen again. So expect more volatility in December and in 2026, of course, but still bull market can continue. And then lastly, not really an FAQ, but I wanted to wrap up this call. It is the season. We just went through Thanksgiving. I hope you had a wonderful Thanksgiving. We're getting close to the giving season of Christmas, of course. And we wanted to just really thank our generous clients here at Retire Path for all the great work that you've done and support some really cool organizations and churches in other areas. We quite often track this. We see it firsthand from you. We see over $2 million from our clients like yourself, if you're watching this, has been sent to maybe a donor advised fund for future giving, or directly from your IRA for a qualified charitable distribution to your church, to some other organization, maybe animal welfare, maybe veterans, could be anything. We've seen a number of organizations that I track each month. So again, we just want to remind everybody that the season's not over yet. The year's not over yet, of course. There's more time to give if you can. We're here to help you with that. And again, just thank you for all the generosity you've done so far this year. Over $2 million is a tremendous sum. So thank you again. And thank you for watching this short video. We approach the management of your complete financial landscape very seriously as a trusted steward, advocate, and confidant. We're completely committed to you, the client. Of course, reach out to us with any questions. Our website, email, phone. You can always call your individual financial advisor first. I know most of you will do that. You have year-end meetings coming up. please reach out to me, the Chief Investment Officer, with any questions. And we just hope you had a wonderful Thanksgiving and a very Merry Christmas and a Happy New Year, because I will talk to you again at the beginning of 2026. So we'll talk about kind of what happened in 2025, how we ended up, and we'll get into a little bit more of an outlook for next year, next month. So again, thank you again, and I hope you have a great holiday season. Thank